Barrick reporting its second quarter results a little earlier today. The world's biggest bullion producer beating estimates, higher metals prices, countering the impacts of rising costs and lower output. Joining us now, Mark Bristow, Barrick President and CEO. Mark, always a pleasure. Let's just talk about the price, if we might, for a moment. Every time I talk to you, you tell me that you are a long cycle business, that you're in this for the long game. But nevertheless, I'm curious to get your short-term take on what is happening. Everybody's now increasingly believing that the Fed is going to taper its QE program. That's likely to be dollar positive and potentially gold negative. What's your view of the setup?
So, Guy, I think, that little sanguine into the gold price at the start of this interview really brings home my point, and that is, we run mining businesses for the long term, or we should, and this short-termism is something that comes and goes. I think more importantly, your question around the Fed and what it's going to do on the back of the economy, the U.S. economy. I think we ought to look further than that too, to the global economy, and whether we've actually seen the full impact of the irrationality of the way the world has managed COVID and the impact it's going to have on the global economies and ultimately the global economy. So still very short term in the U.S. sense, as it is in times like this. I'll take you back to 2008, 2009. We only saw the full impact of the global financial crisis in 2013.
Fair enough. Mark, but along those same lines, if you do see, say, higher gold prices because of inflation worries, that winds up pushing up the cost of everything else. And we've seen that. Oil, copper, all the input stuff that you have to deal with. On the call, you were talking about the fact that your efficiency gains were enough to offset these kind of cost increases. And I'm wondering how much more can you wring out of those efficiency gains if we continue to see higher input costs?
So, Alex, there are two things that drive cost, and many of the commodities are the same because we measure our costs in cost per ounce, not in unit cost per ton. And so one of the pressures the gold industry is facing is the cost per ounce pressure, which is really a grade-driven thing. We've looked at the impact. There's certainly evidence of higher. The biggest driver for our costs right now is steel, and that's really impacts our big capital projects. We bought a lot of our steel forward. People are talking about transitionary impacts. We've expanded our stock so that we can manage that. We're still consolidating the two companies. There's bigger buying power. We approach things slightly differently to many other companies, but the big focus for me is the quality of the assets, the grade that we mine at, because that keeps our costs under control.
When are we going to see significant production growth, do you think, Mark?
You're not going to, Guy. We're at a real squeeze because we don't, as an industry, and I would say that generally we just don't. We've sort of gone away from investing, present company excluded, of course, into our future, and we respond to the demands of the market. We're a long-term business responding on a short-term basis. Everyone wants cash dividends. People forget about the importance of profitable businesses in emerging markets that pay taxes as well. There are other stakeholders. So this is a very interesting time, and this crash correction you refer to is a good reminder that the mining industry in general has to keep a good focus on the horizon, and really our ability to react to these short-term things is dependent on our previous activities 2-3 years ago.
Well, true. Mark, what also winds up happening in times like this, though, is that countries where one operates tend to want more piece of the pie, whether that's in taxes or with what happened with Kyrgyzstan and Canada's Centerra Gold, where it basically becomes nationalized overnight. You've worked in Africa for quite a long time as well, and I wonder, are governments wanting a bigger piece of your pie? You've been dealing with this for a long time. How do you manage it? And is this different?
So no, it's not. It's cyclical. I think that when you take over a mine, that's not sharing the pie. That's just taking the whole pie. So that's a little different. But certainly, the emerging markets, the developing world are financially extremely stressed. And again, it's often the point I make to fund managers. We've got to balance the ability to return, cash value to our fund managers and the funds that invest in us. Equally, we've got to be supportive of our host countries who are, often, certainly now, under a lot of pressure. And you would have seen Barrick has advanced taxes in multiple jurisdictions, including Nevada, the United States. So, it's not exclusive to the emerging or developing world. And it's about how you keep your social license and partnering with all your stakeholders. That's the new game in town, is you can't just be exclusively there for investors. You have to be there for the other stakeholders.
Mark, how are you managing your assets from a COVID point of view right now? We're seeing Delta resurgence in various parts of the world. Where vaccines are available, are you going to mandate them? What are you doing on masking? Can you give us an idea of what you're doing from an operational point of view?
We've got very strict mandates. We are growing our vaccination rates. In the Dominican Republic, for example, we're now at 96 first vaccine, 86 second vaccine, and about 8% on the third vaccine. Similar statistics in Argentina. Chile's just about all done. We are now building our vaccination profiles in America. Canada is pretty much under control. The big challenge is the United States. The politicians lifted the mask mandate prematurely. We're dealing with lots of different forces, and really it's all about discipline. And so in Nevada, we back to full protocols, which kept us working right throughout the pandemic. And we're about 25% vaccinated in Nevada. It's the one that really needs more focus. And America in general, as I'm sure you just have to watch your program and you see the challenges that America is facing. It's got all the vaccines, it's got the infrastructure, and should get there.
Mark, a question on that. In terms of workers, are you having to hire more people right now? And what kind of wage pressure on that end are you seeing?
We haven't had that. We have seen some turnover in Nevada. The U.S. is the one where the work demand is the highest. But again, some of that is because we've been changing the culture of that business. We've got a lot more younger people, a lot more women coming into, and by design. So at this stage, we're not seeing that. But again, there is competition definitely visible. New builds in the U.S. and also the junior market is really alive and well and promotional, and it does attract certain categories of workers.